Hello, and welcome. Welcome back to the stream, everyone. Let me just double check that the stream is on. We're back again. This time we're gonna stream for a little bit more. Yep, the stream is working. We're just gonna keep this here. But yeah, welcome back. We're gonna be looking at the price of Bitcoin, where it's going, and what's happening, and what's been going on for the past couple days as well. We're gonna continue also with the articles that we stopped last time talking about. But yeah, welcome back to the stream, everyone. So right now, Bitcoin is sitting at around 87,200. It dropped hard and liquidated even these positions that we were looking about before. We said that it might even, we left when the price was around here, I'm pretty sure, around 88,000 actually. And then it went all the way now to 87,300 because it liquidated so many positions. That's why it dipped all the way to 86,900. But now it's picking up momentum back again to 87,300, which is pretty insane. But yeah, it's pretty neat right now. We're looking at some liquidation zones that are over here. There's one that developed up here and one that already liquidated by the looks of it up down there. And there's another major liquidation area at the bottom here. This is very interesting and very necessary actually. This will tell us that the price most likely is trying so hard to go down here to liquidate a lot of positions. And when the price that's the reason why the price right now is going down so quickly. It's trying so hard to reach 86,600 around this specific area, so it liquidates major longing positions which develop like back here. But yeah, we were talking before that we have multiple different liquidation indicators. We have both the liquidity sweep indicator, the one that I have the circle around right there, which I really enjoy. Another indicator that I have is the liquidation levels, and that basically shows you where the rest of the liquidation bubbles are, where a lot of liquidation areas are sitting. So that's where the price is going to try to be sitting at. So yeah, right now we see it's dropping under 87,000. It's going to try a lot to reach the 86,000 mark, because that's where the next basically the obvious liquidity is sitting at. So we're also going to mention the same things that we were talking about before, both in the the same ways as well. We're going to talk about it again, the levels of, and the article as well, that was mentioning why Bitcoin is doing what it's doing and why other cryptocurrencies as well were suffering in the past month or so. And we can see since we even left it, the price didn't really change that much, but it changed from nearly 3% positive to 1.9%, and around from 2,000 and something dollars to now $1,600, because a lot of liquidity was hit at this specific zone right here, or like basically this zone, but it liquidated a lot from what happened back here. So it's very interesting. But yeah, welcome back to the stream, everyone. I hope you guys are enjoying it. And yeah, we're just basically, what we do in the stream is just we look at the price of Bitcoin. We don't do anything major, and we just examine what's happening. and try to understand a little bit of what's happening and some indicators. And then we also talk about some articles, and we explain what they mean and what they imply, and what's the future that they think it might the price would go to. But yeah, so we have an interesting dynamic playing out in the cryptocurrency markets actually. Bitcoin, Ethereum, and XRP and other major digital assets are retreating, even as some key macroeconomic indicators suggest that inflation is cooling and central banks are cutting interest rates. At first glance, this seems contradictory. After all, lower inflation and easier monetary policy are traditionally supportive of risk assets, yet we are seeing weakness in crypto prices. To understand what's actually happening, we need to look beyond simplistic narratives and examine both the macroeconomic signals and the market real-time behavior. Let me just double check. Okay, we are live and we are public as well, which is which is good. But yeah, right now the price is sitting around 87,100, and we want it to either tell us where the price is trying to go, because the most likely scenario that I see is this liquidation zone right here. This is what it's saying that it might want to go to, because it already hit the major ones at the top here. From what we see, like these specific ones that liquidated a lot and dropped the price all the way to up here. But then at the very bottom now, it's trying to do the opposite, where if it reach this specific zone or this specific level, it will hit a lot of liquidity, which would then force the contracts to basically to sell, or basically force the long positions to sell, which then would drop the market even lower, would drop the price even lower to around here. And we have to see that, but it first has to reach a specific level, basically 80. It looks like it should be around 86,600 actually. So it should reach that specific. If it reaches that specific level, it will drop even lower to maybe around 86,200, 86,400 levels. But we first have to wait and see. But yeah, so the headline from the article actually said that the market fell pretty hard, significantly in the last 2 days. It fell 2%, and Bitcoin sitting around 88,000. Now it's at 86,900, which is pretty significant, but it's still a 1.6% overall positive since the market opened. But this piece suggests that investors remain cautious and are selling risk assets, even though inflation data and interest rate cuts normally would be considered supportive for crypto market. Now, let's parse this step by step. First, what does it actually mean when inflation cools? So we can see right now there's a newer basically liquidity area at the bottom here that developed, or liquidity sweep that developed here. But this still means that it's the price might fall under, but we don't. I'm not sure if this is the actual liquidity sweep area, or we're still waiting for it to develop, because if this is the actual liquidity sweep area, then hitting this specific price point around here would then make the price go down even sharper, which would then liquidate another major long positions. Yep. Okay, so we see that it's actually might be a actual liquidity. Actually, it might not be. It should be an actual liquidity area, because it already continued to this side as well. So the price is going to try very hard to reach this specific key level, and if it reaches this specific key level, it means that it will also try to liquidate all the way to down here, which would then liquidate even more, unless some people try to basically invest more so they don't get liquidated even more, because this is pretty much, this liquidation zone has been here since since like a couple hours ago at least. So we have to wait and see first where the price is trying to go. You can see there's a hard like line that's being stopped at here, that's being basically stopped at. But yeah, welcome everyone to the stream. Hope you guys are enjoying it. We started a bit late today, but I hope that's fine. Yeah, we might finish a little early because of that. So now the price is sitting around 87,200, and you can see there's a lot of like buying volume compared to what happened up here, where it liquidated a lot of the bubbles that developed before, a lot of the liquidity levels that developed before over here, which then basically forced even more liquidation at the very bottom here as well. Yeah, but we can see the reason why the price isn't really lowering that much is because this is basically a lot of long positions are trying to not get liquidated over here, so they would invest more or do even more contract or add more liquidity into the pool, so they basically drive the price up and not like get liquidated at the end here. But I was saying before that the reasoning has logic to it, but it also contains like hidden assumptions. For example, one of those assumptions is that news about inflation and rate cuts translate immediately into liquidity and risk appetite. But in reality, markets often require clear confirmation that monetary policy will be accommodative for an extended period, not just that inflation has slowed recently or basically in this case, recent like inflation data from the US showed the prices rising less than expected, with annual consumer price index at 2.7% in November compared to a forecast of 3.1%. So this was taken as evidence that inflation is cooling and would allow for Fed rate cuts basically in 2026, which initially caused a short-lived bounce in crypto prices earlier this session. Even though, even so, that bounce was fleeting. So basically, Bitcoin, Ethereum, and XRP all fall back after initial spike, which highlights a critical point. Basically, crypto markets are not driven by like macro data in a mechanical way. So traders look not just at raw data points, but at what those data points imply about future monetary policy. Hey, what's up? Welcome to the stream. Liquidity conditions and risk sentiment in this situation, traders began to question whether the inflation data was actually strong enough to shift the trajectory of Federal Reserve policy. The conclusion in many trading desks was that while inflation is cooling, it may not be enough to trigger like immediate or deep rate cuts, especially like given mixed labor market data and uncertainty over future Federal Reserve action. But we can see here what's happening since we started the stream is that a lot of people got liquidated back here, and the basically it tried very hard to reach this liquidity sweep pool at the bottom here, because if it did reach the specific zone, then the price would have shot down even more and liquidated even more positions at the very bottom here, which was like a large liquidity position compared to what's up here. But yeah, that's when a lot of buyers like stepped in and basically added added price to the to Bitcoin right now, so it doesn't liquidate their positions at the very bottom here. But you can see there's still a lot of also selling aggression that's happening right now, even though buyers are also trying very hard to not get liquidated, because their liquidity pool is actually very close to like that level. But yeah, this leads to the first major truth actually about crypto price behavior. So liquidity and monetary policy expectations matter far more than individual data points. So a cooler CPI print alone doesn't guarantee easier financial conditions. It simply increases the possibility of future rate cuts. So traders price markets based on what they believe will happen next, not what they already like happen. So in this case, although inflation cooled, markets remain unconvinced that a sustained easing cycle is imminent. So particularly given like mixed employment data as well, and that hesitation is keeping many like investors on the sideline. But yeah, the price right now is sitting at around 87,200, and a lot of liquidity happened a little bit ago actually, which was insane. We were already live during all of this scenario, and we explained why this happened and why this happened and how the price actually got affected there. But then now there's more liquidation pools at the bottom here, which is why the price is kind of being driven at the bottom compared to anywhere at the top here. Liquidity sweeps, I mean, at the bottom here. But yeah, as I was saying, so a second important point is that the downward price moves in crypto are often like amplified by forces like by forced liquidation and leverage dynamics. So when leveraged positions are prevalent, traders borrowing to buy Bitcoin or Ethereum, a drop in price can trigger like liquidations. So which in turn like accelerates selling pressure. So according to recent reports as well, forced liquidation in the market reached hundreds of millions of dollars within a short window during the most recent sell-off. And this type of mechanical selling pressure often overwhelms macro-oriented buy signals. But yeah, so we have basically 80. The price is around 87,200, which has been actually kind of leveling for a little bit because the price is trying very hard to reach the 86,800 level because of the liquidation at the very bottom here, which if it triggers, it will liquidate even more positions. But yeah, it's still around 2%, over 2% since the market started, which is a pretty big positive. We can see any new trading view articles that are talking about this. Well, interestingly enough, is saying like strategy, the Bitcoin company, basically MSTR, MicroStrategy, shares of Bitcoin development company strategy jumped 4.8% in the morning session after the price of Bitcoin rose. So boosting sentiment for crypto related stocks. As one of the largest corporation holders of the cryptocurrency, strategy valuation was closer tied to its price movement, which is very interesting right now. But yeah, strategy shares are extremely like volatile right now, and have had like 61 moves greater than 5% over the last year. In that context, today's move indicates that the market considers this news meaningful, but not something that would fundamentally change its perception of the business. That's what the market is kind of telling us. Now, the previous big move we wrote about, I'm talking about the TradingView article that I'm reading right now, was 4 days ago when the stock jumped, dropped 6.5% on the news that the investors' concern amount over its strategy of funding large Bitcoin purchases through the share sales. But yeah, we can talk about how these strategies actually work over here. What we have, basically the indicators that we have. So the first indicator that we have is called a liquidity sweep indicator. This is the one over here, this basically rectangle that we have. And it means that there's a lot of liquidity sweep that might happen at the bottom here, which means that basically as soon as price, specifically, we're just talking about price here, not what is actually happening behind the scenes. When price reaches the specific like zone of liquidity sweep, so if the price drops all the way towards here, it will most likely drop even harder down, because it will sweep a lot of positions and it will liquidate a lot of long positions that are saying that the price will not reach this area, similar to what's happening down here, but this one is on a much bigger scale. So if the price reaches around here, basically 86,600, it will liquidate even more, maybe to 86,300 or 400 if it reaches this specific zone. So we have to wait and see if the price is actually going down here. But because now we're not sure if there's still a lot of buying pressure that's happening, because what we see from the previous like candlesticks, these specific candlesticks over here, are indicating that there's a lot of buying pressure that's still happening, trying to save the remaining liquidity compared to what happened back here. Basically, the company disclosed it. It bought another 10,000. Yeah, we can see the price is actually dropping now. We can see if it will actually reach the specific zone. It might be in the next candle, because is there more liquidity? Yeah, this is basically liquidity over here. We can see this, these circles over here. These rectangles and these circles are liquidity. That's what we're seeing right now. Yeah. So you can see right here, the bottom area. If it reached the bottom area, then it will liquidate all of this position down here, which would then make it reach this bottom area at the very under it by a little bit. It will make the price drop by a little bit. But right now it's hovering around 87,000, which is very interesting. So we still have to wait for it to actually reach the specific zone, and then we will know if it will actually drop more, because that's what we think it will do. But yeah, it's dropping to, it reached 86,800 and like 60. So we're still waiting for, yeah, okay, and it should drop even more now by a little bit. Come on. No, wait for it. Don't judge yet. Come on, it should liquidate the positions over here. Alright, so I think I liquidated the positions and reached a little bit under, and then it went back. But it should have, yeah, so this is why I was saying that this might not be the actual same amount of liquidation that's happening back here. This is why this one is much more important, in my opinion, the bigger one. Because this is just literally just hid liquidity and liquidated some positions, and then it went back, because this is a very small liquidity sweep area compared to the bottom one. The bottom one is much larger one. So if it reached the bottom one, then it would have actually mattered even more, like much more, and it would have dropped it to maybe around here compared to this tiny liquidity area. But as I was saying, we were talking about strategy. Actually, recent buying. It bought literally like 10,600 bitcoins for like for $1 billion or something like that, financing the purchase by selling its own stock. This action led to share dilution. So for the first time in years, a core metric tracking Bitcoin held per share turned negative. This meant existing shareholders now owned a smaller slice of the company's Bitcoin holding. Compounding the issue, the price of Bitcoin itself fell below 90,000, adding pressure on the stock. Furthermore, reports surfaced that index provider MSCI was considering excluding strategy from its index, a move that JP Morgan estimate would trigger outflows of 8.8 billion from institutional funds. So strategy is down like 45% since the beginning of the year, and at $164 per share right now, is trading 63% below its 52-week high of 455 from July. So investors who bought $1,000 worth of strategy shares 5 years ago will now be looking at an investment worth $5,000 now. But yeah, it's very, very interesting about what happened with MicroStrategy. It's a very pro crypto company, in case you didn't know. But yeah, we said, and I'll repeat it again, basically. A second important point is that downward price moves in crypto are often amplified by forced liquidations and leverage dynamics. When leverage positions are like prevalent, traders borrowing to buy Bitcoin or Ethereum, a drop in price can trigger liquidation. So which in turn accelerates selling pressure. According to recent reports, forced liquidation in the market, yeah, we talked that it reached hundreds of millions of dollars within a short window. Now, another dynamic to play in is profit taking. So, for example, what we see happened up here is most likely like profit taking. This area over here, the price reached an all-time, basically a very, not all-time, but a very high, which then amplified it, which then basically made the price drop pretty significantly, because a lot of people tried to sell, basically profit take the very top there, because they basically just made money. So after strong gains like earlier in the start of the year itself, some investors lock in profits rather than immediately reinvesting. This means that even positive macro news may not instantly translate into buying. Instead, capital can rotate out of crypto into other assets or into safer positions, which put downward pressures on prices. But yeah, the price right now for Bitcoin is sitting around 87,100, which is nearly 1,500, over $1,500 more than the starting price of the market open, and over 1.8% since the market open as well. But yeah, it's sitting around 87,100 right now. And there's, as you can see, there are newer liquidity bubbles that just occurred as well, that we can kind of see, that are happening over up here and down here. This is what I mean. They didn't just happen; they happened like 10 minutes ago, but that's what we saw right now. This is what's gonna be like driving the price. Basically, this is what most long positions will want to reach, so they liquidate the short positions here and make pretty much a decent amount of money, similar to the bottom here. A lot of short positions will try to reach these specific key levels to try to short, basically, what's it called, liquidate the long positions at the very bottom here. So beyond like macro and leverage, there's also like the issue of market positioning and sentiment. So cryptocurrency markets have been under pressure in recent weeks, with Bitcoin like drifting below $90,000 and several altcoins following the downward trajectory. In a risk-off environment, traders often reduce exposure to volatile assets, not because fundamentals have worsened, but because risk tolerance changes. When big players reduce positions, the market interprets that as a signal to be cautious, which can create a feedback loop, basically leading to further selling. So we can see that Bitcoin now is sitting at around 87,100, 87,100, which means that it's around 1,500 over the starting over the market open, but it's dropping significantly since the high today of literally nearly 90,000, basically 89,400 a couple hours ago. But yeah, it's still very much trying to go all the way down here to liquidate the positions at the very bottom as well. It's also like worth noting that macro global conditions aren't uniform. While some economic economies are easing, other aren't. For example, discussions in the market about possible interest rate action from the Bank of Japan or the Bank of England introduce additional uncertainty and fragmentation in global monetary policy. This patchwork of signals can create confusion and reduce broad based confidence in global risk assets. So you can see here what's happening right now is because there is basically a lot of liquidation at the very bottom here. The the short positions are trying very hard to hit these specific liquidation spots at the bottom. But these what's happening here is a lot of like long positions are buying in more, so they don't lose their spots at the very bottom here, or they don't get liquidated here. So we still have to wait to see if the price actually reaches the specific areas over here down here. It will liquidate even more and will reach this specific areas. But because now it's kind of like hovering between the $87,000 mark, we still don't really see where exactly if it's going all the way up or all the way down. We still have to wait and see. This is what it's basically like standing between. But we were saying what confounds many traders is the assumption that cool inflation must immediately reduce interest rates and spark buying. In practice, central banks move cautiously. So even when inflation slows, central banks may opt to pause or take a gradual approach to rate cuts, especially if other indicators like market labor, like basically like labor markets remain mixed. So this means that markets sometimes price in a 2 to 3 rate cut scenario that never materialized, and that creates volatility and retracement in assets like Bitcoin and Ethereum. So you can see right now if you look at Ethereum, but this is Ethereum USDT, it's not USD, not USDT, which is funny, but you can see here, similar to Bitcoin, it's also have a little bit of liquidity sweep at the very bottom in this area. That's why when it reaches, oh, this is very interesting. That's why when it reached these zones right here, which you can see, it liquidated pretty hard. So the price here tried very much to hit these liquidity zones. I believe it reached it here and then almost reached it at the bottom here. But then after it reached it all the way back here, it liquidated all the way back down here, even trying to hit this liquidity sweep at the bottom, but failed to do so because a lot of buying momentum happened, similar to what happened in Bitcoin a little bit ago. But yeah, we can see Bitcoin is right now stabilizing around 87,000 over here. Basically, there's also a psychological aspect of the market. So when prices have drifted down for weeks, traders became conditioned to selling rallies. Short-term traders look for any reason to reduce exposures. So, and they often use like macro news as an excuse rather than the cause of price moves. This dynamic alone can keep price depreciate. Basically, keeps prices depressed when fundamental news appears positive on the surface. But yeah, basically we're looking at the price of Bitcoin, Tether, US using like Binance right now, and we have multiple indicators. We can try to see the other liquidity sweeps at the very top here, but it's not really that interesting. But yeah, the price right now is sitting around 87,175, which is over 1,600 and nearly a 2% positive since the market started, which is pretty good because when we started it was pretty down bad. But yeah, the price is still hovering around that price. We said that it will hover around that for a pretty decent amount of time. We could look at silver today because silver has been insane actually. It did reach, oh, it reached even a now all-time, oh, it's already 67.45, which is wild. Wow. And it's gonna get even more now. Oh, look at that. That is insane. This is like a 3% positive since the day start, which is wild since the market opened. This is an, I think this is like nearly reached 7.4, oh, 7.45%. What the hell? This is very, very interesting. Because the price right now for silver was pretty much around the 60s for a very long time, or like 60 something, and then it went all the way now to like positive a lot of percentages, literally just in the last couple weeks actually. So silver is just literally on a major bull run. We can kind of look at the maybe 15-minute candles, which shows us how insane that silver run actually is. You can see that this was like basically a couple days ago and it was trading at around 60, but now it's all the way to 67%. $67. But yeah, if we go back to Bitcoin right now, basically looking at the 15-minute candle, we should switch that to the 3-minute candle, which I really like more because it gives you slightly more information about what's happening. So basically, understanding these market dynamics requires a sense of like scale. So when we talk about like inflation cooling, we can look at the price right now is going up pretty high, actually pretty significant. But we can't see the liquidation at the very top here. This is the only liquidity bubble that we see. If you have a liquidity heat map, it would help you a lot more. But yeah, the price might try to go up here or down here to hit these liquidity levels, or like liquidation levels. Basically, we said that we want to talk about inflation cooling. This is a signal about like the potential future path of like monetary policy and not immediate change in liquidity. So the Federal Reserve and other central banks operate with lag. They respond to trends over months, not like hourly market shifts. Meanwhile, like crypto markets react in real time to speculation about what those policies mean for risk assets. The result is often whipsaw behavior. So basically, it means like positive macro signals, but trigger short term rallies, which then reverse amid uncertainty about future policy directions. But we can see right now the price of Bitcoin is around 87,000. But it's been hovering around that for a pretty significant amount of time actually. It, it reached 87,360, but right now it's hovering around that. But we cannot determine where it exactly is going to continue to go. So to accurately like interpret why Bitcoin, Ethereum, and XRP are falling, even as inflation cools and rates are cut, it's helpful to break down the difference between news impact and policy impact. So macro news like inflation data or a single rate cut influences expectations, but true policy impact, meaning actual changes in monetary conditions that affect credit, liquidity, and risk allocation, happens over longer cycles and with repeated signals. Because traders are trying to price in future conditions, the mere possibility of future cuts isn't enough to drive like sustainable rallies. And as yeah, similar to what you can see right now, it's hovering around 87,200 with not really much price changes because it had a lot of difference that's happening right now. I think it's kind of still stabilizing around that price, and not a lot of major momentum or volume is hitting compared to what happened before here. In crypto, this effect is often like magnified. So, because many participants use leverage, if markets anticipate like easier money, but then doubt those expectations even slightly, positions get unwound, and prices can fall sharply. So, forced liquidations, margin calls, and stop losses all contribute to downwards like spiral that are often mistaken for fundamental weakness, when in fact they are mechanical effects of positioning. So we can see now this candle is actually hitting pretty sharply up around the 87,300 mark, sitting around that, which is very interesting because the previous candle already reached similar highs around 87,360. But yeah, we don't see much price action going on right now because it's had a lot of price action before and it's kind of trying to stabilize around these key levels right now. These are most likely the new support and resistance level that developed because there is basically like a liquidation at the top here and at the bottom here, unless we see a little bit of upwards trajectory, but it's still not very very obvious where it's going right now. But yeah, we're saying that another element we need to consider is the difference between headline inflation and core inflation as well. Headline inflation includes like all price, while core inflation strips out like volatile food and like energy costs. So market pays close attention to core inflation because it's viewed as a more like stable measure of underlying inflation pressure. So like in recent data before, core inflation showed subdued growth, which helped like fuel hopes of rate cuts. However, traders ultimately want clarity on the path of monetary policy, not just like isolated data points. And in the absence of concrete policy changes, selling pressure like continues. But yeah, right now Bitcoin is sitting around 87,300, which with not much movement happening around this candle that we saw here. Basically, just between buying and selling with equal momentum. You can see here around 2% over the market open since the start, which is over 1,800. $1,800 since the market start, which is pretty decent, but still a lot lower than what it reached at the top. I think it reached around like maybe 4% or something like that a couple hours ago. But yeah, we should recognize that the cryptocurrency market is still relatively young and less liquid than like traditional markets. This means they are more prone to exaggerated moves in response to both macro signals and market positioning changes. So in this environment, like even moderate shifts in trade sentiment or uncertainty about futures policy can trigger up like outsized price moves. But yeah, one of the biggest reasons crypto markets can fall, even when inflation cools and rates are cut, is that markets don't trade on what happens, basically. They trade on what they think will happen next. By the time inflation data is released and rate cuts are announced, expectations have often already been priced in. So traders spend weeks positioning ahead of those events. When the event finally arrives, the question immediately becomes whether the outcome was good enough to justify higher prices. If it isn't, markets will sell. But yeah, the price right now is sitting around 87,280. 280 with not much happening right now. Basically 260 right now. Now, in the case described that we were talking about, actually, cooling inflation and rate cuts did not come with a clear signal that like monetary policy would turn aggressively, accommodative like uh, for a sustained period. Instead, the message many traders took away was that while inflation pressure may be easing, central banks remain cautious and data dependent. This uncertainty is enough to prevent risk assets like Bitcoin, Ethereum, and XRP from attracting fresh capital in size. Yeah, but because right now the market is very stable, we cannot really tell exactly if it's the next candlestick, if it's going up or down. We have to see it like reach specific key zones where we have like either the liquidity sweep at the very bottom here, or liquidity uh, area at the top here, or at the top here, which then if it reaches specific levels, it will try hard to reach to the very top here. But we're still checking because right now it's very stable. It's very like uh, along these key levels right now. 'Another like important factor is rate cuts are not always like bullish in isolation. So rate cuts often happen because economic growth is slowing, or because financial stress is emerging somewhere in the system. So in those scenarios, rate cuts are reactive, not like stimulative. So markets sometimes interpret them as confirmation that something is breaking, rather than as a invitation to take risks. So when that interpretation dominates, capital flow towards like safety rather than speculation. So yeah, you can see the price right now is actually pretty much increasing all the way to 87,000. 87,390 right now, over $1,870 more than the starting price, which is very interesting right now. So we were talking about the distinction matters a lot for crypto. This distinction that we were talking about, because Bitcoin and other like digital assets tend to perform best when rate cuts occur alongside expanding like liquidity. So strong growth expectations and rising like risk appetite, they tend to struggle when rate cuts are associated with economic uncertainty. So deteriorating labor markets or like tightening credit conditions elsewhere. So without clarity on which environment we're entering, traders like hesitate all the time. But yeah, we can see now the price level is pretty steady around the $87,300 mark. There isn't any like price action happening right now that we can, study or understand. Another layer that we wanted to talk about is literally just timing. So like monetary policy kind of works with long and variable lags. So even if rates are cut today, it can take months before those cuts translate into easier credit conditions. So with higher like lending activity or increased speculative flows. Crypto markets, on the other hand, move instantly. This mismatch in timing often leads to short term disappointment after seemingly positive macro news. So it's very, very interesting what we talked about. But yeah, there's also like the issue of real rates, real rates versus like nominal rates. A rate cut doesn't automatically mean financial conditions are loose. What matters is the relationship between interest rates and inflation. If inflation falls faster than rates are cut, real rates can remain elevated or even rise. So high real rates continue to compete with non-yielding assets like Bitcoin. This dynamic is rarely discussed in crypto circles, but plays a meaningful role in capital allocation discussion decisions, basically. But yeah, market structure within like the crypto itself also matters because Bitcoin, Ethereum, and XRP don't trade in isolation from each other. They're basically part of a tightly connected ecosystem where liquidity, leverage, and sentiment spill over rapidly. So when Bitcoin weakens, altcoins often like fall harder, and when Ethereum struggles, it affects DeFi, NFTs, and like layer two ecosystems as well. But yes, XRP also, despite its unique use case and narrative, still trades largely as a risk asset during broad market moves. You can see from before here that these indicators that I'm using a couple indicators. The first indicator that I'm using is the liquidity sweep indicator, and this is what is shown over here and what is shown over here. This is kind of the reason why, and at the bottom here as well, this is kind of the reason why price moves very significantly. It's because at the very bottom here, let's talk about this specific one. There's basically liquidity sweeps at the very bottom here, which means that when the price actually arrives and goes under this one, which happened live with us last time, we were saying that the price will get liquidated and it will shoot down even way further down. That was live as well when we talked about it, and it happened during the live session that we were at. Similar to what happened here, we said if it reaches this specific zone as well, it will get also shoot up a little bit higher, and it did shoot all the way up here because of these liquidation sweeps. The other thing is the liquidity level. This one is just shows you where major like liquidity levels are or where the new liquidity levels are, and this is where like a lot of people try to like drive the price into or that area because it will liquidate the other positions. Another indicator that I'm using, which doesn't really matter as much, is the volume indicator. You can kind of just see it, but it's kind of noticeable already from the candlesticks themselves, because it just shows you the trading volume that's happening for buying and selling and which one is dominating the other one during that time. But yeah, we also are saying that leverage amplifies all of this. So during periods of optimism, leverage builds quietly. So funding rates turn positive, open interest rates, and traders increase position size. So when price stalls or reverses, that leverage becomes a liability. So liquidations don't care about inflation data or rate cuts. They are automatic, mechanical, and indifferent to narrative. So once liquidation cascades begin, price can fall rapidly regarding of macro headlines. This is why often actually you see markets fall on good news. Good news doesn't remove leverage. It doesn't reset positioning. It doesn't instantly change risk tolerance. In some cases, good news is the catalyst for traders to take profit or reduce exposure because expectations were already stretched. But the price of Bitcoin right now is sitting around 87,000. 87,100, over 1.86%. The market open, and around $1,600 over the market open as well, with Ethereum being 4.6% over the market open, which is very interesting. But yeah, the position right now is sitting at Bitcoin sitting around 87,000 right now, 160, which is pretty insane. We're talking about how there won't be any market movement for at least a little bit. So it's very interesting, and yeah, because the market already opened a little bit ago. So now we just have to wait for any form of indicator or anything that says where the price is heading towards, but it doesn't look like it's showing, because you can use things like a fair value gap or something where you will say, oh, because there's 3 downward candles, this means that the next candle is most likely going to be going up, which kind of looks like it's happening, but not really. So it's still like it still doesn't really necessarily make sense right now. Another underappreciated factor is cross-asset competition. So crypto does not exist in a vacuum. So when when rates are cut, other assets react too. So equities may rally, bonds may catch a bid. So credit spreads may tighten, and investors with limited risk budgets may choose to allocate to assets they perceive as less volatile or more familiar. So crypto has to compete for capital in that environment, and it doesn't always win. There's also like regulatory and political uncertainty layered on top of macro conditions. Even when inflation cools, ongoing debates around crypto regulation, taxation, and compliance create friction for institutional investors. For some participants, macro easing is not enough to justify increased exposure if regulatory clarity remains like elusive. So this keeps marginal demand muted. But yeah, right now the price is sitting around 87,000. It's trying very hard to reach the liquidation spots at the very bottom because there isn't really much at the very top. But yeah, also saying there's another reason why crypto fall during positive macro development, and it's narrative fatigue. Markets are forward looking, but they are also psychological. So if traders have heard the same bullish macro narrative repeatedly without seeing sustained upside, they become skeptical. They like skeptical. they stop reacting positively to the same signals. This doesn't mean the signals are irrelevant. It means the market needs like confirmation through action, not just data. Also important to recognize that inflation data and rate cuts are backward looking to some extent. So inflation tells us where prices were, not where they're going. Rate cuts respond to past conditions. Markets, meanwhile, are trying to anticipate future growth, future earnings, and future liquidity. So when those future paths are uncertain, risk assets struggle to gain traction. So in crypto specifically, sentiment shifts faster than fundamentals. A few days of downside price action can overwhelm weeks of constructive macro developments. This is partly because crypto markets are still relatively thin compared to traditional asset classes. It doesn't take much selling pressure to move like price meaningfully, especially during periods of low liquidity. So another dynamic highlighted indirectly is that like the role of expectations around future rate cuts. If markets were priced in aggressive easing and only modest cut materialize, disappointment sets in. That disappointment shows up selling, shows up as selling. So even though price technically moved in a supportive direction, this asymmetry between expectations and reality is a common source of like volatility. But you can see the price right now is around 87,000 with $1,500 positive since the market opened and over 1.8% positive, and now it dropped to 1.7%. But yeah, we can see right now the price is trying to drop very high, very hard to the price levels. I think I have some issues with this. But yeah, the price is sitting around 87,000 right now, with it trying very hard to reach these liquidation zones at the very bottom here. So if it does reach this liquidation zone, then it will liquidate a lot of long positions, which then would shoot the price down to even like lower positions. So we still have to wait and see where the price is going right now. But yeah, Ethereum and XRP add additional layers of complexity. Ethereum faces ongoing questions around like network usage, fee dynamic, and scaling development. While none of these issues are existential, they influence how investors assess value during uncertain macro periods. XRP, meanwhile, remains sensitive to regulatory developments and broader market sentiment. So, regardless of macro easing signals, but yeah, we're saying that the price is trying to dive very much under the 87,000 mark for it to hit these specific liquidity levels at the bottom here to liquidate the other positions to go down even further to this specific 86,400 or something like that. If the price drops below these certain levels and try to reach here, then it's most likely going to continue all the way down here. But yeah, Ethereum and XRP add like additional layers of complexity. We talked about that. Another uh, over like looked factor is like seasonal liquidity. So towards the end of the year, trading volumes often thin out, and thin markets exaggerate price moves. In that environment, even modest selling pressure can push price lower, and positive macro news may fail to generate sustained buying interest. We also need to talk about the difference between risk on and relief rally. So sometimes markets bounce supply because conditions keep getting worse. This is not the same as a durable risk on environment. Crypto markets often require clear, sustained signals of improving conditions to trend higher. In the absence of those signals, rallies fade quickly. All of this explains why Bitcoin, Ethereum, and XRP can fall even as inflation cools and rates are cut. The macro story isn't like binary; it's layered, conditional, and dependent on like expectations, positioning, and timing. So cooling inflation reduces one headwind, but it doesn't automatically create a tailwind strong enough to overpower all other forces. But yeah, we can kind of still see that where the price is still trying to hit this under 87,000 price level, because if it does hit this specific level, it means that the price will even go down even lower to 86,500 level, because of the a lot of like the liquidation that's waiting to happen at the top here. But yeah, we talked about like what's crucial for anyone watching these markets is to avoid oversimplification. So basically, falling prices do not mean that like automatically macro data is irrelevant. Rising prices does not automatically mean macro conditions are supportive. Markets are constantly reconciling multiple signals, and crypto sites at the intersection of macro liquidity, psychology, and structure. Basically, a crypto sits in there. This is why serious analysts focus less on a single headline and more on trends. Is inflation like consistently cooling? Are rate cuts part of a sustained easing cycle or a cautious adjustment? Is liquidity actually improving? Are financial conditions loosening in like practice, not just on paper? Until those questions have clear answers, crypto markets are likely to remain volatile and sensitive to shifts in sentiment. Understanding these helps avoid emotional reaction and helps explain why good news doesn't always lead to higher prices. And it reinforces the idea that crypto markets are complex systems, not just simple reactions to isolate data points. But yeah, the price is sitting around 86,980 right now. And another piece, like basically 1.7% over the market open. And another piece of like the puzzle that rarely gets explained properly is liquidity versus sentiment. So people hear rates are cut and assume liquidity instantly floods the system. That's not how it works. Liquidity is not just the policy rate, is the availability of credit. Basically, the willingness of banks to lend, the appetite of institutions to deploy capital, and the stability of financial plumbing. Basically, rates can be cut while liquidity remains constrained. If banks are cautious, balance sheets are tight, or risk managers are defensive. In that environment, crypto does not benefit the way people expect. Um, this is especially relevant for Bitcoin and Ethereum because significant portions of their demand in recent years has come from institutional and semi-institutional players. These participants do not react impulsively to a single CPI print or rate decision. They look for confirmation across multiple indicators like credit spreads, funding markets, repo stress, volatility indices, and equity market breadth. If those indicators do not confirm a risk on regime, capital stays sidelined. But yeah, the price right now is sitting around 1.7% over the starting price, over the market open, with silver even dropping under uh, around $66.9. $66.9. nearly 2.3%, which was pretty significant actually. We were watching it when it was like 4% or something like that. But we can see the difference actually in the USD and Japanese yen is very interesting. It's in the positive in the 1.3% actually. But we also wanted to talk about like ETF flows. They are a good example of like this behavior. So like spot Bitcoin ETFs have introduced a new channel for capital to enter and exit the market, but they have also added a new layer of expectations as well. When macro news turns positive, many traders assume ETFs inflows will accelerate immediately. When that doesn't happen, disappointment sets in. ETF flows respond to investors' conviction, not headlines. If institutional investors are convinced that easing will persist, inflow slows or reverse, putting pressure on price even in a super officially like bullish macro backdrop. So we can look at the price right now. It's sitting around 87,000 and 30. It's literally just been hovering around that for the past couple, like for the last hour or so, or over an hour, which we kind of seen because there isn't any indicators, or because it already like stabilized around this area, so there isn't really much that is happening. I also wanted to say that if Ethereum faces a similar dynamic, but with additional complexity as well, because Ethereum's value proposition is tied not only to macro conditions but also to on-chain activity, network fees, and ecosystem usage. So in periods of uncertainty, investors scrutinize fundamentals more closely. So if transactions activity or fee generation does not show strong acceleration, macro tailwind alone may not be good enough to attract aggressive buying. This doesn't imply Ethereum is broken. It means valuation sensitivity increases even when like macro signals are like mixed. But yeah, XRP also behavior further illustrates how like narrative and structure can override macro data. XRP often like trades as a proxy for regulated like regulatory sentiment and broader like market risks. Even when inflation cools, unresolved legal or regulatory questions can dominate investor psychology. Uh, in those cases, macro easing becomes a secondary consideration. Price action reflects uncertainty rather than macro optimism. Another crucial concept here is financial conditions versus policy intent. Central banks can cut rates, but financial conditions may remain tight if markets do not transmit those cuts effectively. Equity volatility, credit availability, and funding costs all feed into financial conditions. Crypto is highly sensitive to these conditions because it sits at the speculative end of these assets spectrum. Uh, until financial conditions loosen meaningfully, rallies tend to be fragile. There's also the issues of positioning asymmetry. Crypto markets often enter macro events with skewed positioning if too many traders are positioned for bullish outcomes. Even mildly positive news can lead to selling because there is no incentive like increment buyers left. This dynamic explains why markets sometimes sell off immediately after events that were widely anticipated. The trade has already like basically crowded. We also need to address the misconception that inflation cooling is unambiguous, unambiguously good for all assets. So lower inflation can signal slowing demand. Slowing demand can mean lower corporate earnings, tighter budgets, and reduced speculative activity. In that scenario, investors may prioritize capital preservation over growth. Crypto being volatile and non yielding does not benefit automatically from that mindset. In addition, global macro conditions are not synchronized. While one region may be easing, another may be tightening or facing structural stress. Global capital flows respond to relatives. Yeah, we were saying that global capital may flow away from speculative assets like crypto, regardless of dominant inflation trend. So the thing is, like the price right now is around 87,180, and there isn't really much price change that is happening. It's been sitting around that for the past hour or so, and it won't actually reach anything pretty soon. We just have to watch and see, because these are like the points that it should reach, either up here or down here. It's not gonna change as much, because it's been trying to ease down after all of the thing that happened in the past couple hours right now. Yeah, we also need to address the misconception that inflation cooling is unambiguously good for all assets. So lower inflation can signal slowing demand. Slowing demand can mean lower corporate earnings and tighter budgets. And reduced speculative activity. In that scenario, investors may prioritize capital preservation over growth. Crypto being volatile and non-yielding does not benefit automatically from that market. From that like mindset itself. So in addition, global macro conditions are not like synchronized. While one region may be easing, another may be tightening or facing structural stress. Global capital flows respond to relative opportunities. So if yields remain attractive in one market, or if currency risks rise elsewhere, capital may flow away from speculative assets like crypto, regardless of domestic inflation trends. Another factor that weighs on crypto during periods like this is volatility targeting. Many funds adjust exposure based on volatility levels. When volatility spikes even temporarily, exposure is reduced. Crypto volatility tends to rise during periods of uncertainty, which can trigger systematic selling independent of macro fundamentals. This selling pressure can persist even as macro news improves. It's also worth discussing the role of narratives around the Fed pivot. Basically, markets have been conditioned over the last decade to expect strong asset performance whenever central banks ease. But this relationship has weakened as inflation dynamics changed. In a world where inflation remains a concern, easing does not carry the same signal it did during low inflation regimes. Crypto markets are still like adjusting to this reality. Now, Bitcoin's identity crisis in the eyes of an investor also plays a role. Is Bitcoin a hedge against inflation, a risk asset, a digital gold, a speculative tech proxy? The answer depends on the environment. During inflationary shocks, Bitcoin has sometimes failed to behave like a hedge. During liquidity expansion, it has behaved like a high beta asset that inconsistently creates hesitation when macro signals are mixed. Ethereum and XRP faces similar classification challenges. Ethereum straddles the line between infrastructure and asset. XRP straddles the line between payments narrative and speculative token. When macro signals are unclear, investors struggle to justify increased exposures to assets with ambiguous roles. So you can see now the price of Bitcoin sitting around 87,220, which is nearly a 2% increase since the market open, which is pretty decent. But it reached all the way to basically 89,000, when we were live before, and we talked why it reached that level and how it reached that level, and why it went all the way down to here right now. And right now we're using a couple different indicators. The first indicator that I'm using is the liquidity sweep indicator. Basically, it shows you where liquidity is, and from seeing that, we can kind of tell where the price is trying to go, if it's trying to go up or down. That's why the price is very much trying very hard to reach these specific levels, and that's why a lot of sellers are trying to drop the price to this specific zone over here. But yeah, the other indicator that I'm using the other indicator that I'm using is called the liquidation levels indicator in this program, and it's basically just showing you where the liquidation bubbles are, and it shows where people might get liquidated when it hits, and the bigger basically the bubble, the more liquidation there is. So that's what also drives the price towards certain areas. That's why the price went falling down from this specific area when it got liquidated at this specific area, and liquidated even more, reaching all the way down here to 86,000 level, and then hitting back up here and trying to stabilize around the $87,000 level. But from what we can see here, because it doesn't really show the top basically liquidity sweep area, it doesn't mean that there isn't one over here. If you have a liquidation heat map, it will show you where the main the amount of liquidation there is. But we can see at the bottom here, there's been this old liquidation sweep area that actually existed for a very long time, and this is where a lot of people might get liquidated out if the price reaches this certain area around 86,600, and basically around 86,600 on the dot, which then would theoretically drive the price even more down compared to where it is, where it will be when it hits like 86,600, if it does that. But yeah, the price right now is sitting around 87,200 with not much change, and just hovering around that current price. And basically, another overlooked aspect of the market often need time to digest macro shifts. So initial reactions are often wrong. So traders react quickly, recesses reposition, and sometimes reverse course days or weeks later. So Crypto 24/7 nature amplifies this process. There is no pause for reflection. Repricing happens continuously, which increases noise and short-term volatility. This environment also exposes the difference between traders and investors. Traders respond to momentum, liquidity, and positioning. Investors respond to long-term conviction during uncertain macro transitions. Traders dominate price actions, which can keep prices suppressed even if long-term investors remain constructive. This divergence can persist longer than people expect. Another reason price can fall during seemingly positive macro developments is hedging activity. As uncertainty increases, participants hedge exposure using derivatives. Hedging pressure can push spot prices lower even if net long-term sentiment is net neutral or positive. This mechanical effect often get misinterpreted as bearish convictions. So we should also talk about expectations around timing. Markets may believe that rate cuts are coming, but they may also believe that they are coming too late to prevent economic slowdown. In that case, easing is seen as reactive rather than proactive. Risk assets tend to perform better when easing is perceived as fueling growth, not when it's perceived as damage control. All of these dynamic converge in crypto markets because crypto lacks a valuation anchor. There's no earning reports to wait for, no dividend yield to compare. Price is driven almost entirely by marginal flows and sentiments that make crypto extremely responsive to uncertainty and extremely sensitive to disappointment. This is why it's dangerous to reduce complex markets behavior to simple explanations like inflation cooled, so crypto should go up. Markets are forward-looking systems that weigh dozens of variables simultaneously. When those variables are like sent mixed signals, volatility and downside pressure are common outcomes. So understanding this helps explain why Bitcoin, Ethereum, and XRP can decline, even as macro headlines appear supportive. It's not that the macro data is irrelevant, it's that the market is still uncertain about what the data means for future path of liquidity, growth, and risk appetite. Until uncertainty resolves, price action will continue to reflect like hesitation, leverage resets, and cautious like positioning. That's not a failure of the assets, it's a reflection of the environment they're trading in. But yeah, now the price is sitting around 87,300 with a 2% positive. That's a start, similar to Ethereum is over 5% positive from the start, over $1,800 for Bitcoin right now. If we talked again about the same indicators that we're using both liquidity sweeps indicator and the liquidation level indicators, and we're using a 3-minute time candles basically, which are very interesting. Now we can see what happened here. For example, this is why I like to use this specific indicators, is because basically you can see here there's a lot of liquidation that appeared after a lot of people put a lot of money to increase the price to liquidate other positions at the top here, so the price can even drive higher. But after it did that, it went all the way down here to break and like even like try to reduce and liquidate some other positions that we see here, and then the price drove all the way to 88,700 and then back down here, where then it liquidated so many other positions at the bottom here, which then hit all the way down to 86,800. But yeah, we were live during the specific area. Let's talk about what happened specifically here again. We can see the prices before this liquidation areas and this over here. That's when the price is trying very hard to hit all the way up here, so it liquidates at the very top, similar to what happened here where we saw it live, that the price basically, we said that when the price hits this liquidation zone at the very bottom, this long liquidation zone, it will drive the price even lower, and then we can see here that it did actually hit this liquidation zone at the very bottom, and it liquidated even more all the way to the bottom here, which then liquidated to the very bottom at 87,500, which then a lot of people, instead of getting liquidated at the very bottom even more, they hit with so much buying orders that then made the price liquidate the opposite short-term positions at the very top here. But after that happened, we can see that the price still like kind of fell down after take profit happened, and then it stabilized a little bit and then hit all the way up here to 89,400. We can see some other similar things that happened back here, where after it hit this specific zone, we were also, I think we were also live during that time, it hit the specific zone and then where it shot up aggressively after liquidating this specific area, because at the bottom here it tried to do the same thing, where it tried to liquidate this area, and if it did hit around this specific like price point around 86,500, it would have liquidated so many positions and it would have dropped the price even more down. But because it didn't, and a lot of buyers stepped in to try to do the opposite, to liquidate the short positions, it basically did the opposite, and it hit over here where you can see that it liquidated a lot of positions, where then like it shot up all the way up here to 88,300 before almost also doing the same thing where it almost liquidated more positions at the top here, which means if it reached around 88,500, it would have liquidated more positions, which would have driven the price even higher, which we can see even from this specific area. It like made it go all the way up to 88,600. But yeah, the price now is sitting at around 87,320 with not much change going on. It hasn't been going on for the past couple minutes. But yeah, it's pretty much a 2% difference, a $1,800 difference, and around basically nearly 5% for Ethereum. Let's look at the price difference between both of them, and you can kind of tell that they're both moving in the same area, like same percentage area. But however, the difference in Ethereum and Bitcoin is very significant. You can see that Bitcoin, for example, only changed 2%, while Ethereum is changing with 5%, which is insane. However, it's still a pretty net profit over the last 6 months at least. It's 29%, which is very interesting. But yeah, if we look at Bitcoin right now, it's still hovering around 87,360. And yeah, that's going to be it for today's stream, guys. I hope you guys enjoyed watching it. Sorry, this one's shorter, but because there are other reasons. I hope you guys enjoyed, and make sure to like, comment, and subscribe. So thank you for